Okay, we are live. Welcome back, everyone, to CapitalCosm Live. It is January 5th, 2026. My name is Danny, and I'm happy to have you here. We're looking at a silver price of $76.08. The overnight market just opened about an hour ago. We're waiting for the Shanghai market to open in just about 40 minutes or so. But before we do, nothing in this video is financial advice. Please do your own due diligence. I am not a financial advisor, so before you make any big decisions, check with a financial advisor and hit that like and subscribe, guys. If you're getting value out of these live streams, if you're getting value out of any one of my videos, I would appreciate hitting that like button, hitting that subscribe button if you haven't already so you don't miss a video, and hitting that bell notification as well so you don't miss a stream as well, so it notifies you that I'm here. Can I get a 1 in the chat if my sound is coming in clear? Let me know if my sound is coming in clear. We are doing this live. You know what? I might up my volume. Give me 1 second. Let's see. So how about this? Is this any better, guys? So yeah, I just got done interviewing Martin Armstrong today. And, we talked about a whole host of things. He brought up the platinum to gold ratio. So today what we're going to do, we're going to look at some of the sectors that could be outperforming gold as well, in addition to silver. And we'll also talk about some of the stuff that he talked about in that interview too. He mentioned that it was really insiders that were piling into silver and gold over the last year or so. You can see it in the charts as well. So we're going to take a look at some of the interview there. For those who haven't seen it yet, I recommend you go check out the interview after we're done with this live stream. It's one of the best interviews I've done all year. Maybe the best interview I've done all year. It's what, the 5th? So technically it could be true. But yeah, we're looking at a silver price of $76.05. And I'm going to pull up a chart of silver. Where are we at? So here we are. Quick recap for the day. We opened up at 73.27 and closed it. We got as high up as almost 78. I think we almost hit 78. Right now we're at 76. You can see we kind of built this wedge here, and we broke out of the wedge. Ironically enough, if we go back to if we look at it from a 15-minute candlestick point of view, you'll notice that we had this 3-hump consolidation. We were talking about it yesterday. We broke out of it. And then yesterday we were looking at this bull flag, and we broke out as soon as I went offline. So it's always when I go offline that all the big things happen. Maybe I should stay offline. I don't know. But if you want me to keep streaming, let me know. But here's where we're at today. And it looks like, we're on this support line here. We're banging on this support line, and we're just about to break out one way or the other. Either we're going to break out to the upside, most likely to the upside. So I think a breakout here in the short term on the 15-minute candlestick is most likely imminent, probably in the next 15 to 30 minutes or so, judging by the way this chart looks. But yeah, I mean, let's go ahead and take a look at gold. Gold today up on the day for the most part as well. On the daily candlestick, we opened the day up at 43.52, closed the day up at 44.47, over $100 day move today. And now we're trading at 44.39. Some weakness in the overnight market. Of course, once Shanghai opens, could be a completely different story. So you want to stay tuned. You want to stick through the live stream here. So, and we also have platinum. So let's look at the futures price on platinum. Platinum opened the day up at 21.67, closed the day at 22.83. Good day for platinum as well. So one of the things that I was talking about with Martin Armstrong is we were talking about insider buying into the markets. We talked about the insider buying of OIH, the Oil Services ETF. You can see it here. The white line is OIH, and the candlesticks are the price of oil. And you'll notice a decoupling between the two. It's as if smart money knew something was coming despite the price of oil. Typically, they should be moving in tandem. And then we also talk about the silver to platinum ratio. So I'll let you guys listen in on some of the conversation. I'm not going to play the entire hour and a half, but we're going to play a few minutes of the interview, and then we're going to talk about it. And then we're going to look at some charts. We're going to look at, we're going to do some ratio analysis to see what is the cheapest metal to buy right now. Is it gold? Is it silver? Is it platinum? Is it copper? I think the answer will surprise you. So you're going to want to keep tuning in for that. And then we're also going to get an update on our institutional money charts. We're going to see where institutional money has been flowing over the last week or so. And I think that will shock you too. Some things have changed. Some things haven't. So some interesting insights lay ahead in front of us. But let's go ahead and play a snippet of the interview, and then we'll talk about it.
Capital flows to everything.
Yeah. And here's an example, Marty. I noticed this, not to toot my own horn, but I noticed this the last couple of weeks, or over the last several months, actually. You've got the oil price here in the red and green candlesticks, and in white, you've got the OIH ETF, which is the oil services ETF. Now, while oil has been crashing down the past year, oil service companies have been getting a bid, and you see the disjoint between the two. And, it wasn't until the Venezuela stuff happened that it kind of was made clear. Were these insiders piling in ahead of Venezuela, knowing that companies like Exxon's not included in this ETF, but, a lot of these oil service companies may stand to benefit if Venezuela becomes open to business. So is this an example of what you're speaking to? Because you do see a dislocation in where, the oil service companies should be moving in tandem with oil price, no?
Ideally, yes. Look, although I couldn't speak a lot about this, it started in November. So I knew about it coming back around November. When did the split in the prices take place?
Around September.
Yeah, okay. So,
or you could say November or October, something like that.
Somebody, obviously, they knew. Look, you got gold and silver rising. All right. Look, people on the inside knew where things were going. They started buying the metals. All right. Ahead of people even understanding what's going on. We had clients there. I told them, okay, fine. Look, we're going into war with Europe. They're going to put capital controls. You better move your metal the hell out of Europe. So then what did you see? You saw a lot of the gold being moved from London and Zurich to the United States, as well as Singapore. Okay, that's in advance of knowing what's coming.
And is platinum getting that bid now today? Because I saw a post from you on X saying that people are bidding up platinum because they could potentially see capital controls on gold and silver, but platinum doesn't have that history.
Right. You can look on our site because the computer's tracking everything, and you can look at the the platinum gold ratio, and basically reached a 23-year low, and put out on our site, I guess last month or a couple months ago, I said, this is it. Platinum's now going to take off. All right. So that's just basically looking at the ratio.
Yeah, there it is. This is platinum to gold.
Yeah.
You had a 20-year low in June, sometime around June or July of this past, or 2025.
Yeah. So this is what, it's starting to catch a bid. Also, you're looking at what are the sources of platinum? It's Russia and South Africa. Okay. So you get into war with Russia, you're cutting off that platinum supply. All right. So just fundamentally, you would expect platinum to rise at that level.
Mhm.
You'd make at least a minimum of 50% retracement back up on the ratio.
So that would take you around here. That'd be like a 3x
Yeah.
in the ratio. Yeah. From a platinum to gold standpoint. And that's assuming gold stays constant.
Right.
So
But, I mean, what you have to understand here is that it's geopolitics that's moving this stuff. All right. You got threats of capital controls, all sorts of different, posturing one way or another. This is basically what we have to contend with. And I think that's when the computer's putting out a panic cycle, not just in war, but even on the euro for 2026. You look at this ratio here, platinum to gold, it's an extreme low.
Mm-hmm.
This is like gold, 1999, at 250.
Well, here's another low. Here's oil relative to silver. And I think it's at an all-time low as well. So
yeah, we're going to look at a lot.
So yeah, it's all the way down here. I mean, this ratio, we haven't seen this ratio this low since oil crashed to negative territory.
Yeah, we're going to pull up a whole host of ratio charts here in a second, and we're going to identify what the cheapest metal is out there, maybe even commodity as well. So stay tuned. We're almost done with the clip.
It's even the silver on the gold ratio. I think you're going to see silver.
So, all right, that's enough of that. I think a lot of you guys may have already watched the episode. If not, then it was posted earlier today. But let's go ahead and take a look at some ratios here. This is the ratio we often talk about. This is the silver to gold ratio. And of course, it's on a log chart. If you look at it from a linear scale, this is where we're at today. Now, this ratio goes all the way back to the 1930s. So you can kind of get a sense of, silver's relationship to gold over a long span of time, close to 100 years now. Now, check this out. We have just broken out of this trend line. This trend line goes back to 1968. Now, there's been a couple of times, once in the 1980s and once in 2011. That was and each one of those instances was at the top of those respective precious metals bull markets. Now, we've broken out above this trend line. Does this imply that we've reached the top of the bull market? I would say no. I would say no, given all of the factors that we've looked at so far on this show. And so, to me, this implies that we're witnessing something historic. We're witnessing a trend reversal in the silver to gold ratio, i.e., we're entering a period where silver will consistently outperform gold. Now, silver has been underperforming gold since 68, perceivably. This is 60 plus years in the making. Again, the common theme that we talk about on the show is that we're witnessing, this isn't just, a bull market that comes around every 10 years or 20 years or what have you. This is something historic. This is something that we may not get again for the rest of our lives. So silver relative to gold, I would say this round goes to silver. Now, let's look at copper relative to gold. Now, this chart doesn't go as far back as the silver chart, but whenever this chart goes down, it means gold is outperforming copper. And whenever it goes up, it means copper is outperforming gold. Now, copper has been taking a beating, and it's it is at historic lows or near historic lows. It just bounced off historic lows just this past month or a couple of months ago in November. So this round goes to copper. Check out how cheap copper is. I mean, let's go ahead and turn on the logarithmic chart. But you could draw a line like this. We haven't broken out of anything yet, but it's hard to make a case that we're going to go any lower than we are today. Maybe we could, but I would say upside versus downside potential definitely more upside potential. I mean, would you agree? Drop me what you guys think in the chat. Who wins this round? Copper versus gold? I would say copper definitely has more opportunity to the upside than gold does. But let me know what you think in the chat. Copper versus gold. Type copper, gold. Let's say type copper beats gold or gold beats copper in the chat. Let me know what you think. Next up, this one's interesting. Copper versus silver. Copper versus silver. Now, this too is at historic lows, meaning that whenever this chart goes down, this is silver outperforming copper. When this chart goes up, this is copper outperforming gold. Now, copper priced in silver is the cheapest it has ever been. So you could draw a support line historically, like right like that, something like this. And we just cut through this support line like a knife through hot butter. So let me know your thoughts. I would say from an upside to downside ratio potential, I would say copper probably has more potential for upside. But let me know what you guys think. If you think copper beats silver, type copper beats silver. If you think silver beats copper, type silver beats copper in the chat. Curious to see what you guys have to say. So far, I would say copper beats silver beats gold. Copper beats silver beats gold. Next up is platinum. This is we just looked at the platinum to gold chart in the interview with Marty. But this is the platinum to silver chart. Now, in the platinum to gold chart, I think the case was made pretty effectively that platinum was cheap against gold. By that same virtue, I think you can make a similar case that platinum is also cheap against silver. So I could draw a line like this, and we've been in this channel for quite some time. Something like that. Is that a bull flag? I guess you could classify it. This pole isn't really that much of a pole, flag pole, but it is. One could make the argument that it could be viewed as that. But it's a long-term bull flag if it is one. It goes back all the way to 2000, 25 plus years in the making. But this is platinum versus silver. And remember, guys, platinum was at one point priced higher than gold. Of course, it was priced higher. It still is priced higher than silver. But there was a point in time where platinum was the highest priced metal, then gold, then silver. But that's changed. Now platinum is at $2,000 some odd dollars. Gold is at $4,400. And this is where we're at today. So let me know what you guys think as well. If you think platinum offers a better opportunity than silver, type platinum beats silver. If you think the other way around, type silver beats platinum. And here's a platinum to gold chart. We just talked about that. So this is platinum price in gold. We just looked at that chart with Marty. And I mean, it's pretty much a slam dunk. Platinum, relative to where it's been historically, is priced relatively cheap to gold. So let me know in the chat as well. Does platinum beat gold or does gold beat platinum? And then we've got platinum versus copper. This one's interesting. You could say we're breaking out right now in platinum priced in copper. So you see this? This is a trend line that goes back to 2003. We hit our heads on it in 2009. You could maybe say it goes up something like this. And July of 2025 is when we broke out. So this is a pretty clean looking trend line. Let's turn it into a logarithmic trend, see how it looks. Maybe something like this. And yeah, it looks like we may be coming back down for a retest. But I would say platinum beats copper as well. Platinum is breaking out versus copper. I think platinum offers the better buying opportunity here, but let me know what you guys think. Does platinum beat copper? Does copper beat platinum? If you had to buy, if you had to choose between the two, what would you choose right now? Would you choose platinum or would you choose copper? And so we've got, so just to keep score, I would say platinum beats copper, copper beats silver, silver beats gold. Do you agree? Based on what we just saw, would you agree with that? Let me know why or why not. And give me your rankings in terms of the four metals. Because I'm curious to see what you guys would have to say. Yeah, of course, buy all the metals for sure. Copper's a little hard to buy. You need a lot of space for copper, okay? The other metals are a lot easier to store, but you're going to need a lot of storage space if you store a good amount of copper. But from a if you were to trade like the copper miners or something, you had the choice. I would mainly get invested in copper through the copper miners. I just don't have. I wouldn't store that much copper anywhere. It would just take too much space. But yeah, drop me your rankings, guys. Let me know where you would place these metals, and we're also going to look at the mining stocks too. So, in similar fashion, we've also got SIL relative to GDX. SIL is a silver miners ETF. GDX is the gold miners ETF. And you can see the silver miners are, we could do something like that. It's a megaphone pattern to the upside. Usually that's, I think that's a bearish sign actually. So that, but SIL relative to GDX, I would say SIL is cheap relative to GDX. It's all the way down here, historically speaking. Again, this chart only goes back to 2011, but GDX has been outperforming SIL. The gold miners have been outperforming silver miners. So that's why I think there may be more opportunity with the silver miners as opposed to the gold miners. So let me know. Do you guys think do you think the silver miners beat the gold miners? Or do the gold miners beat the silver miners? Here's a curveball. CopX, the copper miners versus GDX. Now, I would say it's fairly even. I would say that copper miners are priced relatively at fair value to the GDX. I would say it's a tie, right? If I move over to CopX versus SIL, SIL has been outperforming CopX, but it's, interestingly enough, I would say it too is a tie. So from a mining standpoint, I would say SIL probably has the most potential, and then it's really tough to call between the copper miners and the gold miners. So from a mining standpoint, and then we also have, I actually don't have this ready, but we can also do the lithium miners, so LIT relative to SIL. So lithium has been getting smashed relative to silver miners. Lithium miners have been getting smashed relative to silver miners. So lithium miners might be a good play here. If you had to choose between the two, one could make the case just by looking at this chart that you may have more upside potential investing in the lithium miners. You also have the rare earth miners, REMX, which largely tracks the lithium miners. So REMX, rare earth miners, are down here. They're dirt cheap relative to the silver miners. So here's a chart of REMX by itself. And this thing looks ready to tear it up. There you go. It just broke out. Boom. Boom shakalaka. Ready to move to the upside. So that's REMX, nowhere near its all-time high. You also have, oops, let me turn that off. You also have oil versus gold. We looked at that as well earlier in the week. That's dirt cheap. You know, you could look at OIH, oil service companies, versus GDX. That's dirt cheap. Oil services companies versus GDX is dirt cheap. You could say XOP, oil and gas exploration companies versus GDX. That's dirt cheap. So let me know where you would rank all of these assets, guys. From a base metal perspective, from metals perspective, physical metals perspective, the charts indicate that platinum is the cheapest, followed by copper, followed by silver, followed by gold. From a miner's perspective, it seems like rare earths, lithium, silver miners, copper miners, and gold miners in that order. And then I'm also gonna give you guys an update on where these institutional buyers are putting their money in. And let's go dig right into it. So we've looked at this chart before, but for those who are seeing this for the first time, essentially this tells us where smart money is allocating their capital. These green bars indicate institutional ownership volume. And this is in regards to the Sprott Physical Gold Trust. Yep, Sprott Physical. This is PHYS. So you'll see over time, institutional ownership of the Sprott Physical Gold Trust has just been steadily moving up. Smart money is buying into the gold trust. They've been positioning fairly consistently since 2020 when gold was dirt cheap. GLD, it's been pretty much flat. Wonder why that is. That's where a lot of paper gold concerns arise, where you've got rehypothecation, multiple claims on the same ounce of gold, and so forth, existing in places like GLD, in which the custodian is, I believe, JP Morgan. So it looks like the smart money investors are choosing to pile into PHYS, the gold trust, the Sprott Physical Gold Trust, as opposed to the GLD trust. You also see something similar. You see even more so in PSLV, the Sprott Physical Silver Trust. Smart money investors have been piling into silver very quietly. This is a slam dunk. Like, no doubt about it. As PSLV's gone up, seems to be a result of smart money investors getting into this thing. It's not retail. It's not you and I. Unless you're a smart money investor watching me, and which I'm sure we've got plenty of you guys watching, but the vast majority of us are retail investors. SLV, the JP Morgan custodian silver trust ETF, not as much, nowhere near as much as PSLV. PSLV still substantially higher institutional ownership, or at least from a relative change perspective, from a velocity perspective. SLV has been relatively flat. You would expect in this hot market, in this hot silver market, the biggest silver ETF out there, SLV, would get more capital coming in from hedge funds and family offices that require high liquidity in their vehicles. But it's not happening. Not happening in the way that we would anticipate. Now, that doesn't mean the price hasn't gone up. It has. But that would imply that the price is largely moving more so by retail demand as opposed to institutional demand, more so relative to PSLV. Now, SIL, the silver miners ETF, you can see here, boom, huge burst up to the stratosphere and from institutional owners, smart money investors, hedge funds, family offices. The smart money guys, they've been piling into silver miners, it looks like, for 5 months now. 5 months. And not a peep from the retail crowd. SILJ, the junior miners, the junior silver miners, even more so. Like, check this out. Since June of 2024 or so, investments have been pumping into this thing, but the silver miners have lagged behind silver, or they've pretty much kept track of silver. This is the conundrum. That tells us that the confidence is there when it comes to smart money, but it's the retail crowd that's underweight. Smart money is, in fact, piling into the silver miners, silver junior miners, but the retail money hasn't gotten wind of it yet. Opportunity? You tell me. Copper miners. This is CopX. They're really, I mean, there was movement from June of 2023 all the way up until the following year in 2024, and then it kind of bottomed out a bit. But just this past month, you'll see a huge surge up in institutional buying of copper miners as well. Check it out here. Corresponds, you see this black line here. This is the share price of CopX, the price of CopX. So this huge jump up in the price, one can attribute it to smart money guys getting into the copper miner space. Rare earths. This is REMX, rare earth metals, guys. Huge slingshot up. I mean, this is a thing of beauty here. REMX, we just looked at the price chart, breaking out, making, not new highs, but it's breaking out of its consolidating wedge that's made over the last couple of years. And it looks to be mainly the result, the artifact of smart money institutional ownership, which have skyrocketed the price upward. You can see this huge volume in buying from institutional owners. So it looks like the biggest benefit, the biggest or the hottest vehicles right now, as far as I've looked at here, are silver miners, silver junior miners, copper miners, and rare earth metals miners. We could also look at, let's also pull up lithium. We can pull up lithium. Let's see what lithium miners are doing. Are they buying into lithium miners? Oh, well, look at that. It looks like they're just now waking up. So might be the time to start looking at lithium miners. Smart money hasn't touched it. They've been selling out of their lithium trades for a while now, but the last 2 months have seen some revitalization of buying from smart money ownership. So this is all interesting, guys. It tells us that silver and gold, they're leading the way. They're forging the path for all of these other metals to come after them. And all these other metals we just looked at just now, they're pretty much where silver was about a year ago. They're just now breaking out. Not financial advice, but there could be some serious opportunity in some of these other spaces in the not so distant future. So, and of course, I'd be remiss if I didn't plug our good partners at the Boolean Standard Pro. I highly suggest, guys, if you are going to add into your stack, highly consider getting a Boolean Standard Pro membership. It's only, look, it's the Costco model. It's $35 a month, but you get access to wholesale or near wholesale pricing right now without having to. You could mitigate a lot of these markups that you see from these other bullion dealerships. You're already buying at, we're already buying at high prices. Well, high relative to where we were. I mean, we're probably going to look back about a year or two from now. I'm going to be like, oh man, I wish I could buy $80 silver today because now it's over 100 or whatever it is. But you want to mitigate price. You want to mitigate the price as much as possible. So this is an easy way to do it. It's the Costco model. You pay $35 a month and you're able to buy at near wholesale, if not wholesale pricing right now on your gold and silver. For example, Silver American Eagle is currently going for $89.27 average retail price. You can get it at the Boolean Standard Pro right now for $80.99, saving you $8.28. If you buy 20 of these bad boys, you'll save $164. If you buy 100 of these, you're going to save $818. The thing pretty much pays for itself. There's no strings attached. It's a slam dunk deal. I have a special link in the description box down below. And be sure to use promo code COSM10 at checkout to get 10% off your first month, effectively making it under $30 a month for your first month. So, I mean, in my opinion, this is as good as it gets. So yeah, take advantage of it. If you are looking to add into your stack, I've got a special link in the description box. So yeah, guys. All right. So let's go ahead and take a quick check on silver. So $76,215. Hasn't really moved much since the start of the broadcast. But let's go ahead and take a look at some news. All right. So this is from Gold Silver HQ. Central banks are preparing the longest gold buying spree ever. So here's a chart of what are we looking at here? Net central bank gold purchases in blue. You've got the gold price here in yellow. And you've got the 2025 annualized purchases here in the light blue. So as of the end of 2025, I mean, they've been adding into their gold reserves for over a decade now. And it doesn't look like this chart goes back to the 70s. There's never been a buying spree of gold like there's been the last 10 years. And you can see the gold price here spike. And these guys were all buying when gold was down here at what, sub 2000, below 2000. And now look at the gold price rise up. So, I mean, these central banks are not in the market of losing money. Okay, so this is, all right, so for the silver noobs, this is not a forever hold type of investment. The key to this is the silver to gold ratio, which we just looked at. My data from early 2000s shows silver briefly hitting 1-to-1 with gold. However, I would not be holding silver then. My exit point is earlier in the ratio within a period of less risk. The Federal Reserve note, the FRN, the Federal Reserve note dollar amount is not my criteria for transitioning out of silver, as I will be shifting the value over to gold for longer term storage. So that's a good idea. We're looking for exit points in silver priced in fiat currency. I think the better way to do it is to make your judgments on where we lie in the silver to gold ratio. Gold at the end is the dominant money throughout history. So price your silver in gold and use that as an indicator as to when a good exit time may be. Probably will be buying my girlfriend one of those snazzy new Lambo style Tesla, blah, blah, blah. The ratio is simply gold price per ounce divided by silver price per ounce. Recent spot price supporting this. Gold around 44.20, silver around 76. So yeah, he's just showing us how to calculate it. Do not use my levels as a guide. So what are his levels? So, okay, so he's got a little outline here. Let's see what it says. The long-term average is around 50 to 60, but it has ranged from lows near 15 to 20 to highs over 100. Strategic investors often use this ratio for asset allocation between the two metals. When the ratio is high, above 80 to 100, silver is considered undervalued relative to gold. Investors might buy silver anticipating mean reversion. When the ratio is low, 40 to 50, silver is considered overvalued relative to gold. This is a potential spot to exit silver positions and switch to gold, locking in gains from silver relative performance. Specific historical exit points for silver into gold include extreme lows such as around 1919 when the ratio was 18, 1968 when the ratio was 18, and 1980 when the ratio was around 30. These often coincide with market peaks for silver's relative strength. As the ratio approaches lower extremes, 1-to-1, risk increases for holding silver. So 18-to-1 is you've got 18-to-1 occurring multiple times, 30-to-1 at some points. Right now we are at, let's see, what are the exact prices? I'll say 4,400 divided by, I'll just say 75. So we're still 58-to-1. So I would say we're still a little early before we switch over to gold. But let me know what your criteria is, guys. How are you going to assess if you ever do assess when to sell yours, or are you just going to hold on to this stuff forever and just pass it on to your lineage? But let me know your criteria. Are you going to use the gold to silver ratio? And if so, what level are you targeting? Okay, so this is from Eric Jung, our good friend. A lot of experts are brushing all of this off as a nothing burger. This truly is the most hated silver bull run in history by the experts and regular normies. So he's got screenshots of a bunch of guys commenting here. So Kitco, Hong Kong isn't offering much choice and about USD 20 over spot. Silver bullion Malaysia is also out of stock for silver for the past 2 months. Thank you, Eric. What is all this? So yeah, so silver's pretty much out of stock everywhere. So yeah, the point Eric's trying to make is that some people out there are trying to belittle or minimize this news on the part of silver's selling out everywhere as a nothing burger. I don't think this is a nothing burger. If you can't get the stuff, then by definition it's unobtainable. Now, you can still get it, but I remember when I last interviewed my good friend Kyle Horn, the CEO of Bullion Standard, and he was telling me once you start seeing the 1,000 ounce bars completely sell out, that's your sign that you're in a real silver squeeze. I don't think the 1,000 ounce bars have completely sold out yet, but that's one thing to keep your eye on is when those 1,000 ounce bars begin to sell out. All right, so Don Durrett. This is a long one from Don. Let's see what he has to say. We have Don coming up, by the way, later in the week, so stay tuned in for that. Here's my expectation for gold and silver from now until May. January until May is going to be volatile for gold and silver. Gold price range 4,700 to 3,700. Silver price range $85 to $50. Wow. Now I haven't read this analysis yet. So it's pretty shocking. $50. 2026 flow for gold and silver will be reached before May. Gold 3,700 plus or minus 5%. Silver $50 plus or minus 5%. Once the 2026 gold and silver lows are put in, the rebound and run to new all-time highs will begin within 4 weeks of reaching the low. Once the bounce begins, it will become apparent that the correction is over in gold and silver. The wind will be at our back for the rest of 2026. The deep correction in gold and silver will coincide with a top in the S&P 500. So he's basically tying it in to the crash narrative of the S&P. So once the S&P crashes, it's going to take a bunch of other stuff down with it, gold and silver included, at least according to Don. So I see you guys saying SD Bullion has only one 1,000 ounce bar available. Wow. I guess maybe it is time for the squeeze. All right, let's go ahead and finish what Don has to say. Once the S&P 500 drops below 6,200, the bull market in the S&P will be over and a bear market will begin. I'm not buying this top in gold and silver. I'm waiting for the next deep correction. Don't buy tops, buy dips. I expect this to occur in April, but it might begin in March, so we have a long wait. Now, if you guys watched my interview with Martin Armstrong earlier today, he did mention April, strangely enough. So I don't know if Don saw the same interview or this is just his own independent analysis, but Martin sees a major geopolitical event occurring in April. I want to be wrong, and gold and silver do not have a deep correction this year, but the odds of that are terrible. I'm fully invested, so I can't afford to wait for the next dip. Those of you who are chasing this bull market higher could avoid a falling knife, but probably won't. Be careful. Best guess, Don. Well, I hope you're not right, Don, but that could happen. But I'm thinking back at the last times we had some major sell-offs in the S&P, and I don't recall gold and silver selling off as much as the S&P. Don't get me wrong, they did sell off, but I believe they were fairly muted. Let's actually take a look at the charts here really quick, just to make sure. So here's the S&P. I'm going to pull up the S&P. And so we had a correction. You know what? Let's do candlesticks. So here's a crash. I'm going to zoom in on April. So let's look at the most recent one. This is April. And let's go ahead and look at it from a line. And 1 day. Let's see, where is it? So here you go. The high in February all the way down to the low in April. I'm going to include gold here next to it. Yeah, let's do same percent scale. Here's gold. I'm going to turn it white so you can see it better. All right, so here's the low right there. So you'll see the green line, which is the S&P, had a pretty big sell-off, down 14%, but the price of gold actually held fairly steadily. It was actually up by the end of it. You know, we had a steep crash here, you could say. Zoom in on that. Yeah, silver or gold, I should say. S&P crashed about 8%. Gold crashed about 4.5%. So gold got about half of the action that the S&P got. So, let's add in silver here, see what happens. Let's go ahead and make silver. Let's go ahead and make it red. Here's red. Yeah, so silver. Yeah, silver actually crashed below the S&P, but gold actually held fairly well. So I guess if you're overweight gold, you might be in slightly better shape than the S&P, or a lot better shape than the S&P. And if you're overweight silver, you might get smashed a lot harder. But let's go ahead and see if we can find any other points in time. I believe August of 2024, during the Japanese yen carry trade crisis, was another big one. So that's like right here, I want to say. It's like right there. And it's like right there. Okay. Like that. And so the S&P here in green crashed crashed 5%. That hardly qualifies as a crash, but be that as it may, that was a single day move or 2-day move. Gold hit a low of -2%. Again, about half. So 2.5%. So about half the move of the S&P. So gold kind of had a cushion. Silver crashed a little below that. So Don may have a point when it comes to silver. I think gold will be a little bit more resilient to a crash, just based off these two most recent use cases. Does this make sense, you guys? Okay, so this one's from the Health Ranger. Now, it's abundantly clear the DoD and JP Morgan went into business together to build a huge new metal smelting facility in the U.S. It will handle silver and other critical minerals. The conquering of Venezuela was necessary to acquire mining operations there, which had been diverting silver and rare earth minerals to China. Now those metals will come to the USA, depriving China of the significant supply of silver and other metals. Pillaging works, apparently, and JP Morgan is long on millions of ounces of silver, as JP Morgan already exited its short positions on the metal. As the silver squeeze worsens, Trump, the DoD, and JP Morgan are setting up their own silver operation that will be worth tens of billions of dollars because of mineral wealth that the U.S. is stealing from Venezuela, a la the economic hitman techniques. There's nothing more profitable than stealing someone else's oil, silver, and gold. Yeah, so they're setting up a smelter facility in Tennessee. We talked about this yesterday to process Latin American metals. And JP Morgan is a part of it. All right. Before we move on to the next post, guys, remember to hit that like and subscribe. We only have 636 people watching right now. Let's try and get that number up. We can get that reach up by you guys interacting with the stream, hitting the like button and so forth. So if you're getting value, if you're enjoying this stuff, then hit that like button. If you want to. If you don't want to, that's fine too. Let's take a quick check on silver. 76.23. Nothing big happening right about now. Actually, I want to look at it from the trading view angle. So let's pull up silver here. Let's check up on it. Let's do a little candlestick action. All right, so here we are. And yeah, so we opened. The Shanghai market opened. Man, check this out. So Shanghai market opened right here. Look what happened. Bam! Downside. Red candlestick action. Smashed the price from 76, what is that? 76.45 down to $76. That's about a 40-cent move. Looks like now we're resolving back up to the upside. 76.35. But it's all good, guys. We had a great day today. All right, let's get back to... All right, so this is from No Limit. This is not good. I really hate what I'm seeing. Gold up, silver up, copper up. I know you guys don't hate it. Well, we hate it for the right reasons, but we like it for different reasons too, right? I've been in the game for 20 years, and there's one setup that makes me work. So here's the thing, guys. I've been seeing this opening line a lot lately. I've been trading commodities for 40 years. I've been in the game for 30 years, 20 years. Have you guys noticed this line a lot lately? It's like it's all recycled. So I've been in the game for 20 years, and there's one setup that makes me worried. You're looking at it. This isn't just a rally. This is our warning. Here's what's happening and why I'm worried. In a normal market, this screen is impossible. Copper rallies when the economy is booming, and gold rallies when the economy is breaking. They are supposed to fight each other. We are witnessing the breakdown of the risk parity model. The inverse correlation between real yields and gold has snapped. When they hold hands and rip higher together, the market is screaming that the system itself is broken. Yeah, they screwed something up. I pulled up the copper to gold ratio versus the 10-year yield. Huge divergence there. It's been effed up like that since the start of the Ukraine war in 2022. That's when things started breaking. That was it. That was the inflection point. We aren't seeing an inflation trade. We're seeing a capital flight. Smart money isn't rotating out of sectors anymore. They are exiting the casino entirely. The market is front running fiscal dominance. It knows that debt math is impossible without devaluation. They are dumping paper promises, stocks, and bonds to buy things that actually exist, like metals. I've only seen this correlation one event 3 times. So it's happened 3 times before. Number 1, just before the dot-com bust. Number 2, just before the GFC imploded. And number 3, the repo market blowout in 2019. We know what happened after 2019. Every single time the economists said that demand is strong, and every single time we were in a recession within 6 months. When the industrial metals and the precious metals start going up in tandem, the party is over. I've been in macro for 20 plus years and I've built a free guide. Okay. All right, so that's pretty much it on his side. But yeah, he's making a great point. Usually copper and gold run separate to each other. Let's actually see if that's correct. So I'm going to pull up copper. Let's do a new price scale. Let's turn that white. And all right, so let's see if that's true. Log. So, I mean, there is some correlation actually with the two. So, right, you see copper here in white, and the candlesticks here in red and green. Now, I would say there is a lag. Copper tends to, it seems like copper front runs gold in a lot of cases. Well, when it comes crashing down, gold front runs copper. There's divergence here in 2016. You see that occurring, right? A lot of delta here. There's some delta here in 2020. They started diverging again. So they moved in tandem here. But here's something more relevant. Oh, sorry, I was looking at silver. All right, that was silver. Sorry, my bad. All right, now we've got gold. Let's go ahead and clear that up. Yeah, I guess you could make it's kind of 50-50. It's not always the case. There's some unity between the two. So yeah, so he said 2020 or 2019. You see that right there. This right here is when they started moving in tandem. This is the 2019 repo market blowout. 2018 or 2008, I should say. Both metals crashed with each other, so they moved in tandem, and then they both moved up same time. You also saw it move in tandem here. Where is it? 2000. Here's 2000. They moved in tandem here as well. So I don't know. It's kind of iffy, but I think the better signal is to look at copper relative to gold. So if I put in copper and divided by gold, I get this. And then if I put in the US 10-year yield, or let's do a 30-year yield actually. So we've got the copper to gold ratio in the red and green candlesticks, and we've got the 30-year yield in white. You'll notice they track one another. So that basically implies that when gold outperforms copper, that signals weakness in the economy. And so investors tend to flee into gold more so than copper. And that's also an environment that's conducive for more bond buying. That's when investors, start buying more bonds, and that's what brings the yield down. Now, something happened here in 2022. That's when the great divergence began. That's the disconnect. And I would suspect, I also talked about this with Marty today. Again, check out the interview if you haven't. But I suspect this happens because investors essentially lose confidence in buying bonds, and they just go all in on buying gold as opposed to bonds. And that's what causes this ratio, this copper to gold ratio, to go down, because it's effectively gold outperforming copper. Investors are piling into gold, and that brings the ratio down here. And then it also brings bond prices lower as well, which spikes their yield. So something definitely is broken. They screwed it up. I'm just looking at the data, guys. All right, so next one. This is bigger than Venezuela. Less than 24 hours after U.S. military pressure escalated in Venezuela, something far more telling happened. The infrastructure was already in place. The United States quietly locked in a strategic silver smelter deal. So we talked about this earlier, designed to process up to $1 trillion in Latin American precious metals, including Venezuelan supply. So I think this is pretty much the same thing we covered. This is about control, security, and price discovery. Physical metals moving out of unstable regions. Refining brought back under U.S. oversight. Paper markets losing influence. Strategic metals secured for energy, defense, and AI. Yeah, it's all being locked down. Fortress America. Get ready for it. And you know what? If you guys are... yeah, well, I'll leave it at that, actually. Never mind. Let's go ahead and take a look at silver. 76.14. No big price action today. Sorry, guys. I can't conjure up a big price shock tonight. Maybe it'll happen when I log off. Let's go ahead and see what else is being talked about on Twitter. See any new posts since we went live. So TF Metals report, hey, CME, looks like it's time to raise margins on silver again. Why not go ahead and take them to 100% so that we can finally end your bullshit? By the way, yes, we noticed that you've previously hiked margins on upside volatility and not downside. Trying to cap price, perhaps? Yeah, I brought this notion up. It's like this is somewhat of it's kind of like a roundabout way to do price controls. It's not entirely price control, but to a degree, it kind of is. Yep. I think we looked at this post before. Today, a couple of nice people felt compelled to DM me and tell me that silver will never rise above 75.50 per troy ounce again. Well, look at that. It's already above 76. And it still is above 76, 76.15. So another one from Eric Jung. This pick is dedicated to my buddy, Weimar Silverware, Whale, formerly known as Weimar Silver Baron at Banker Weimar. I created a new logo for him. Well, that's cute, Eric. Very nice. Man, Eric is just dominating the feed. I used to be the biggest silver conspiracy theorist in the room. Now I pale in comparison to the AI dudes and the new silver experts. You know what? I haven't watched any new AI guy videos. Anyone's you guys want to do a watch along with some of these videos? Has there been a good one lately? If there has, feel free to link it into chat. I might do a few minutes of a watch along or something, see what he has to say. Yeah, we just covered this from the Health Ranger. I think we covered, okay, good morning. Happy Silver Falling Wedge Day. Yep, we covered this falling wedge yesterday. It's boom, shakalaka, breaking out. No. All right. Well, you guys don't want the AI Asian guy videos being played even more so than they already are? Yeah, I'd love to have Vince Lancy on, but I can't get a hold of him. He doesn't have his email anywhere. So if you guys can let him know that I want to interview him, tell him CapitalCosm would like to interview him. And, you know, my email is on the description of my videos. Silver trading resumes in Shanghai. Okay, so it's already started. Old news. We've already read that one. Silver trade delays in 1 ounce silver rounds reach 7 weeks on some products at major U.S. bullion dealers. We're witnessing something historic in the silver market. Today's 10% spike may cool demand slightly to start the week, but we may not be far from the point at which retail joins the silver stampede. So this is a screenshot from SD Bullion. It says to expect product delays. Oh, speak of the devil, there he is. Ladies and gentlemen, when they say silver is abundant, and you've actually done the math. I don't get it. This is silver. Seems kind of a forced meme. I don't think it's particularly witty. So I think that pretty much covers all the news today. Let's go ahead and take one final look at the silver price and see any other news items. I think we covered it. Let's see. Oh, snap. It's all right. Now we're cooking. 76.47. I saw one person in the chat today say we're going to close out the chat just like watching the minute by minute chart like we did yesterday, just tick up and down. And that might be our fate, actually. Let's go ahead and see. So let's go ahead and turn it into a 1 minute chart. Man, smashy smash. Okay, 76.30. Can we get a 1 second chart? That would be pretty cool. 1 minute. All right, so 76.26. Zoom out a bit. See if we can see any patterns here. Can we draw any patterns? Doesn't look like it. All right, 76.25. Yeah, guys, I hate to sound like a broken record, but hit that like button. Subscribe to the channel if you haven't already, if you're enjoying these videos. And of course, hit that bell notification so you don't miss an episode. I think that's going to be it for now. Doesn't look like there's anything major going on at the moment. But, yeah. Oh, and a quick note, guys, we will be interviewing Rick Rule tomorrow. I know I didn't mention him yesterday when I was reading out the guest list for this week. And that's because we just locked him in as of today. So he'll be coming on tomorrow. I'll be posting a special Substack post later tonight. If you have any questions that you want to ask Rick Rule come tomorrow, let me know in that Substack post. So become a member on Substack at capitalcosm.substack.com. And, once you see that post up live, you'll be able to post your questions in the comment section of that post for Rick. So, all right. Well, 6.2 earthquake in Japan right now. Well, 6.2 isn't that much. I'm not an earthquake expert. I'm not a geologist or anything like that. But I don't know. 6.2 it's not that rare. Well, don't get me wrong. It's still a big earthquake, but still. All right. Well, that's all I got for you today, guys. Hit that like and subscribe. Check out the Boolean Standard Pro if you want to add in more to your stack. You guys are saying 6.2 is pretty bad. It's not, but it's Japan. Like, Japan is built around earthquakes. Their buildings are built to withstand those types of magnitudes. So it's not like, if an earthquake if a 6.2 were to hit like Florida or something, it'd be devastating for sure. Or like, I don't know, North Carolina or something like that. But Japan is well equipped for that stuff. Or maybe I'm wrong. I don't know. Do you guys want to stay put for the earthquake? Do some earthquake coverage? No, I'm just kidding. Well, all right, that's it, guys. Hit the like and subscribe. Check out the Substack. Check out Boolean Standard Pro. Check out the link down below with a special promo code. And if you'd like to use the same charting feature that I use in these videos, i.e. TradingView, I do have an affiliate link in the description box below as well. So you can click on that link, become a TradingView member, and use the same trading software that I use. So, all right, that's it. Have a good night. Bye, guys.